welcome to the RANsquawk morning briefing for Tuesday 22nd of September 2009. Just heading through now 9 o'clock, so a quick review of where we are at the moment and a recap of the overnight news articles of note. Starting off, it's pretty much been a positive start to the session so far in UK and Europe. Bit of a reversal pretty much of all the asset class moves that we saw at the European entrance yesterday. In particular, it seems to be again led by quite a steep fall that we've seen in the dollar index, which is trading down around 0.7% at the moment. Consequently, we've seen likes of euro dollar already hit a one-year high and dollar Swiss down at 14-month lows. Taking a look at what we have seen overnight, obviously the Japanese market is shut for those silver holidays. They're not back in the market until Thursday. But we did see in the region, Asian Development Bank releasing their latest report saying that regional economies will expand at a faster than expected pace this year. Also, allied to that, overnight, New Zealand's nationals current account deficit shrank to its narrowest in more than 4 years, which did boost the Kiwi currency overnight. We are trading as well with the dollar index weakness, Kiwi dollar up at 13-month highs this morning as well. Also, a couple of analysts looking at the US currency also weakening on speculation with the forthcoming group of G20 meeting on Thursday and Friday in Pittsburgh will call for a reduction in global trade imbalances, which may cause further gains in currencies in terms of against that of the US dollar. Take a look then in terms of some of the news flow on the global front. In the FT, they write that the framework for sustainable economic growth that the G20 leaders are poised to agree on Friday will lack a powerful enforcement mechanism, according to officials yesterday. And also from the FT, banks are managing to liquidate hundreds of billions of dollars worth of CDOs, given that in recent weeks more investors have been buying their underlying assets at deep discounts, thus permitting liquidation. We've also just seen ECB's Weber. He's just hit the wires in the last few minutes, said that current level of rates is appropriate in terms of interest rates. Says at this stage it's too early to exit the currently extremely loose monetary policy, and lower potential growth rate of output could mean inflation risks emerge earlier. As the recovery becomes assured, withdrawal of monetary stimulus will move to the forefront of monetary policy agenda, according to the German Council member Weber. Take a look in equities. Obviously, we're up at the moment, like the DAX up 1%, the CAC and FTSE up around 0.75% at the moment. As already mentioned, that weaker dollar has seen a bit of a flip from yesterday's performance on a sector basis. So basic materials are the outperforming sector at the moment, as well as oil and gas. As WTI crude futures look to come back towards $71, retracing a lot of the heavy losses from yesterday, trading up there as well around 75 cents at the moment. On an individual basis, out of the FTSE, noting for RBS, the company says they're considering alternatives to issuance of B shares for the asset protection scheme. It says in negotiations with the UK government over finalisation of terms of that asset protection scheme. However, there are no plans to put forward at this time to the board or shareholders. Their shares, though, are seen marginally lower compared to their UK banking peers. That's as the Times writes that the bank, as RBS, could be forced to scrap plans to raise £5 billion from a share sale after its investors indicated yesterday they'd be somewhat reluctant to go forward with any further fundraising at the bank. Elsewhere for Cadbury's and the ongoing story and their takeover or potential takeover from Kraft, Cadbury's on the front page of this morning's FT has approached a takeover panel to ask Kraft to put up or shut up on the US food group's £10.2 billion offer. And elsewhere in the Journal, the CEO of Cadbury's has said that Kraft deal may make some sense. So no doubt we'll see more comments to come throughout today's session. In the DAX of VW, they're expected to take a stake in Japan's Suzuki Motor by the end of 2009, according to German magazine reports citing an unnamed Suzuki executive. And for Unicredit and Eurostocks, keep an eye on them for any commentary this afternoon, as their strategic committee board will meet today to evaluate different options to strengthen Unicredit's capital. The company could adopt a mixed strategy comprising the issue of Tremonti bonds and the launch of a capital hike, according to El Sol 24 newspaper. So taking a look then in terms of the calendar for today, pretty light in terms of the UK and Europe on economic releases. However, from the Eurozone, we do have some supply at around the top end of amount of €2 billion coming out of the Netherlands in their 2010, 16 and 2028 DSL taps. We'll also get an Italian €1 billion 2025 extraordinary BTB tap, usual time results just after 10 o'clock. That'll take us through then the 1:30s today. It will be from Canada for retail sales report, and nothing from the US until 3 o'clock London time. We'll have the Richmond Fed Manufacturing Index alongside US House Price Index for July. We'll also see reverse auction, the second of the week from the Bank of England. They're targeting 2036 and 2055 maturities today. And we'll get the first of the week's US auctions with a 2-year note, $43 billion worth, to be 6 o'clock London, so 12 in Chicago. For energy traders as well, we'll be looking out for the API or inventory numbers. They're due after market, as well as US earnings today. We'll get the likes of Carnival Corp and Comagra Foods.